Okay. Good morning, you beautiful humans, guys. It is Pounds for Breakfast. It is Wednesday. Now, we had a little bit of a crazy day yesterday in the markets. I could see things just weren't going to line up. I obviously sent the message out. I saw a bit of a drop in Bitcoin, and I'll show you what were sort of the signs that I saw outside of the obvious that, first few trading days of the year can be a little bit low in volume, not cause market structures to play out the way we think. But I'll show you some of those signs. But generally speaking, people ask me, why am I so optimistic after, let's say, a bad trading day, within a week, within a month, whatever the case may be? And the reason's pretty simple, right? Is that once you've had a difficult trading day, you've learned to kind of not overtrade or revenge trade. There's some of you out there, I know that's your thing. If you can learn not to do that, you can learn to put the pen down, put the PC down, close the laptop, etc., and live to trade another day, you then move on to your next win, right? So you guys will know that if you've been through the academy, if you go through the psychological part of the academy, you'll understand that, your next loss is just another step closer to your next winning streak, right? Because again, you can win, but at some point in time, the math says you have to have a little bit of a loss. Now, again, that's what we teach. As long as you lose small and you win big, you're okay. It's just a matter of rolling the dice. Okay, so I'm a little bit loopy this morning. Didn't sleep all too much last night. Myself and the markets, we battled it out yesterday evening on gold. If anybody else had a battle with gold, please let me know. We saw some data come in, and I'll break it down in terms of what happened in the Fed interest rate minutes. But myself and gold, we had a little bit of fun last night. I ultimately came out victorious, but there was a few sketchy moments involved somewhere in between. So what's happening in the world? What do you need to know about? Let's jump into it, right? So yesterday I indicated there's a bit of data that came out yesterday afternoon. There was data coming out for the US dollar. That overall, had initial negative effects on the dollar. The markets kind of absorbed the info, and price action played out as per normal. Now, the one that is big that I do want to discuss and break down today, because I believe investors and people around the world will get to the actual truth over the course of today, tomorrow, and really set the tone for next week, is those Fed interest rate minutes, right? If we have a look at some of the news articles that were published about it, and I'll break down what the interest rates, what the minutes are, how do you deal with them. But essentially, they reported officials indicated lower rates would be appropriate by the end of 2024 meeting minutes, right? So I saw quite a few different stories, quite a few different headlines, none of which really reporting an accurate picture, right? Now, when we had the FOMC meeting last month with Powell, he was quite open. And for those of you who were with us in that meeting, please put your hand up. We had an all-night, we pulled not an all-night, we had a trade-a-thon, 2 or 3 hours listening to Powell, looking at the markets, discussing, etc. But he was quite transparent about where the Fed sat, and most of the economic policies they deployed had seemed to be working, right? They're seeing the data start to trickle in, but the high interest rates they've imposed are starting to bring inflation down. That's generally the summary, right? But he was extremely dovish, extremely caring to the markets, even though there was a lot of articles saying Powell will be hawkish, blah, blah, blah. Right. So again, as you guys know, news media generally reports one thing. They want majority of the population to do one thing, while the market actually is going to do completely the other, right? Again, I've discussed, people ask, but David, then why do we look at the news? Because often when you know something is BS, you just need to look at it long enough. And when they start to kind of stray off the path, you kind of then have your spidey senses up and about to know something's going wrong. So what really happened with regards to the minutes, right? Very, very simply put, when the minutes come out, they look a little something like this, right? And it's a little bit of a boring read, but what it really tells us, or what it gives us, is essentially, the internal discussions of what happened at that Federal Reserve meeting, who was there, and then they start breaking it down into these summaries, right? Now I'm going to send this, and I'm going to post this on the school app for anybody who wants to download, anyone wants to take a read. Very, very interesting read. If you can just bear through some of the some of the data points that they essentially give out, but they speak about what's happening in the world, what's happening in the markets, all the internal reasonings for what they released in December, right? It's meeting minutes, it's self-explanatory. Now, the important part about this is that majority of what we saw from Powell, this shines true in the meeting minutes, right? The committee, acknowledges that what they're doing has had effects on the market that they believe to be true, with bringing inflation back down to that goal of 2%. And they also are fully aware and cognizant that the financial policies they've imposed over the course of last year in terms of raising interest rates, those effects will be lagging, and they'll only see those effects start to really trickle into the US economy and the rest of the world really over 2024, 2025, even up until 2026. So that was one of the big discussions was, would the Fed be cognizant of the fact that some of the policies they're introducing will have a lagging effect, and can they over tighten, can they over rain down this economy and essentially cause the US economy to crash? The fact is they're cognizant of the policies they put in place. They're aware of, the changes that are happening, and they essentially satisfied with the changes they're seeing thus far. Now, what was absolutely clear in that meeting, and I think it was clear to everybody that was watching it live and as well as most of the media after the fact, was that the Fed said, hey, this is the interest rates. We're going to keep it this way. If anything, majority of the Federal Reserve, I don't think anybody voted for another rate hike. I don't think anybody voted for an additional rate hike there. So that was pretty much set in stone. I saw a few articles this morning saying, the Fed undecided about, etc., or, it's likely this is the ceiling. It was established already in December that was the ceiling. So they're reporting delayed information that we received live, and we interpreted in that same way, right? Weaken the dollar. And Wall Street loved the data. Now, the minutes echo that. I can't find anything in the minutes that are outside of what we already know from the Fed, right? And what's pretty amazing is that you also see the statement that was approved for release, right? So the exact words that Powell said, they go through and they approve together, right? This is what Powell ends up saying, right? When we have those interest rates announcements. So the meeting minutes overall, right, were extremely positive for the markets, for Wall Street, for cooling down that dollar. Now, as I've explained in the past, and you can go back to previous shows, you can go back to previous posts, you can search on, school, on Telegram, whatever the case may be, anything about FOMC, interest rates, or Powell. As we discussed in the past, as interest rates pause and start to decrease, this will have a weakening effect on the dollar. Now, as we've started this year, we're seeing a fairly strong dollar, an uncharacteristically strong dollar that came in on the 2nd. We saw that continued strength on the 3rd, which was yesterday. And this strength in the dollar, I believe, is due to low volumes, to other participants and other players that would otherwise taken advantage of this and run with it. We're not seeing those volumes to capitalize on some of this weaker dollar data. And this would, in my opinion, my personal opinion, count as weaker dollar data, because Powell is very, very clear, and the Federal Reserve as a whole is very, very clear about their stance. Interest rate cuts will happen next year, and they brought the timing of those interest rate cuts in, meaning they're going to start cutting rates sooner than what was originally forecast at the previous FOMC meeting. Now, that was the two key moments, or two key things investors were looking for back then and now, right? And that stays true. So I believe that markets should have interpreted this data as negative for the dollar, net negative immediately for the dollar. But we got to wait for markets to fully absorb that. Now, again, reasons for markets taking time to absorb this data into a net negative is again due to that volume issue, right? So let's jump into that. We're going to get into that in a second as we get into the chart, but let's quickly just have a look at what else is happening in the course of today. So for this afternoon, just in terms of the dollar, there's a bunch of things happening. Germany's got some inflation data that's coming out, Brazil's PPI data. So I'm not really focusing on that all too much. I'm looking at this afternoon to try and see, do we start to get the volume numbers that we generally see for a normal trading day? Now, again, we had a difficult day yesterday, extremely difficult trading day yesterday. I decided to cut any new trades that we're going to be issued. We are going to attempt to issue trades again today, because again, it's about staying on the horse, right? That it can flip around today and we could get the volumes we need. However, for most particular cases, and I just want to say this with a bit of caution, in most particular cases, if you're a bit uncertain, if you're starting to trade, etc., as I've advised in the past, you're starting to trade, learn to trade on a demo account. Don't put real money into a volatile, or at least a market that is a little bit sideways, if you will. Trade on a demo account, there's nothing wrong with it. From next week, we should see the volumes that we normally see come into play. And the reason these volumes are important is that when we see certain market structures or price action formations, these volumes and these changeover of time zones trigger a shift in volume, right? as you guys have known with previous strategies, etc., we've taught this. And those then create these market formations and these moves that are predictable. When we've got a lack of volume, we generally have an imbalance, and that we see price action structures not adhered to. That's primarily the reason. However, I'm saying this because if you choose to take a chill pill this week, there's nothing wrong with that. If you choose to get on the horse next week, perfectly fine. Just a word of warning out there. Don't say I didn't tell you, right? Just a quick shout out. I can see Petunia in the house Friday, Vaynant, Mishak, Garwin, Daniel, and I can see Kay Letake. I can see Tumelo is in the house. Good morning, you beautiful human beings. Okay, so just in terms of what's happening for the US dollar this afternoon, we do have dollars for lunch 3:15 this afternoon again, provided we see normal market moves. If I see markets all over the place, it's not going to be worthwhile having a show where there's zero movement whatsoever unless something else develops. So Premium Plus, just stand by for a notification there. But as it sits, we are scheduled Premium Plus dollars for lunch at 3:15. We will have some jobless claims data that we will be trading live at that particular time. And then a little bit later on, we got some S&P Global Composite data. In my opinion, doesn't move the market all too much. But again, anything is possible when we see some of these bigger swings. Now, across the board yesterday on the S&P 500 heat dex, we see red across the board, right? With the exception of one or two companies here. But again, technology and communications pretty much taking a massive hit there. Consumer also taking a big hit. So nothing really standing out here. We've got some drug and pharmaceuticals that are doing more than 3%, but generally speaking, the average is down 1 to 2%. Now, why is that? Let's jump into the markets and let's have a look at why are we seeing some of these negatives across the board. So let's start off with yesterday. I want to give you guys a quick rundown or quick breakdown over what kind of happened yesterday, what we were looking at, etc. So pounds for breakfast yesterday morning, we were speaking about this is gold. This is currently a 30-minute time frame, right? On gold, we were talking about, this bear market formation and the fact that we're going to buy low and sell high, right? Very, very simply put. I made some adjustments here. Yesterday we kind of just had made this touch a little bit earlier in the previous day, and I hadn't then seen that diagonal there. So we started to look for buys yesterday on the price of gold. Now on that 2052, 2054 mark, we got a little bit of an indication that there's support at this area, and I was highly hopeful that we would start to see that little bit of a swing for two reasons, right? First reason being the markets, I was hoping there's enough volume in the markets for the markets to potentially see any sort of weakness in the dollar based on that Fed minutes that were coming out late in the day. I did explain this in a few messages or a few screenshots or comments that I pasted on some of the trades. However, that did not materialize. We saw markets sinking down. We thought, all right, let's try to grab a little bit lower. That did not materialize. And at that point, I decided, again, there's no normal market structure here. We're just seeing this market absolutely collapse on gold, a straight move, which we don't all too often see. And this tells me that there is a bias in the market, or that we're missing one of the two players in this particular case. In this particular case, I think as we look at yesterday across the board, we saw the dollar pretty much being the driving factor, the dollar strength across the board. Now, this afternoon, we got some temporary strength at about 5 p.m. Right there when we got that weaker than expected dollar data, right, that came through, initially affected the markets. Not for too long. We saw initial spike on gold. Primarily, we saw about 120 pips and then a pullback quite sharply, right? Now, yesterday evening, when we got to the actual Fed minutes themselves, the Fed minutes had a bit of an opposite reaction. I think this is, the power of news media, right? Is that when we got the Fed minutes, which is right there, we saw an initial slump or strengthening of the dollar, slumping of gold, and then the markets kind of interpreted the data and slowly built that data back up, right? We saw pull down or 2031 on gold, and we saw a little bit of a build up on the price of gold to where we are now. Now, where we are now is quite an interesting place. And again, I will send the meeting minutes over to you guys. You guys can read through for yourself and just confirm. And there's a lot of useful insights in going through these minutes if you care about understanding the financial markets, understanding a little bit about the US economy and the ripple effects. But what I'm hoping is that the markets will start to interpret this data a little bit more clearly. Now, our strategy there is obviously we would like markets to go back into this formation that we previously had. We'd like to see a break primarily over the 50 moving average. Even on a 1 hour time frame, we would like to see that as a push into that zone, as a confirmation thereof but we're obviously going to play pretty cautious as well again today. There is, for those keen-eyed among you, it looks like what's starting to form a little bit of a scallop formation, right? We've got this bull market structure that's starting to slow down some of its momentum to the top side, right? So we had an initial, if we ignore some of the impulses there, we had that initial, high energy move towards the top side, a little bit of uncertainty at 3-4 a.m. this morning, a little bit more of a push, and now a little bit of uncertainty, a little bit of sideways movement. This can sometimes culminate in a pennant formation, which is basically just a slowing down of buying activity, signaling to sellers that these buyers are potentially exiting this market or taking profit, which can cause this market to swing towards the downside. So we are very aware from that from a price action formation perspective. Now, the thing that gave away yesterday that markets were not correctly in balance or correctly have the right balance was yesterday we already gave out some trades in the morning, right? And then on Bitcoin, as I spoke about yesterday morning, Bitcoin created this ascending triangle formation or bullish triangle formation. There we go. And broke above, which was great. From a price action perspective, the timing was fine for that to be valid, right? I just want to go to the break above here, and I just want to point to that. Now, we had some alerts going off like mad when Bitcoin started to really break through this support area, right? And really the key moment here was at about 330. At 330, we saw Bitcoin collapse, not only through its support, but Bitcoin moved all the way down to that area over there, well over, $4,000 per coin in a shift perspective. Now, whenever I see a move like that, it's not uncommon for crypto, but I was looking at the rest of the markets. Were there any corrections happening in the markets? Yes or no? And this tells me that move to the downside is unparalleled dollar strength, right? So this again can be funds that are buying into Bitcoin, that are trying to drop the price, get in a little bit early, and as much as there can be a pump and dump scheme, there can also be a dump and then pump scheme, right? So they essentially drop the price and then get in early and then allow the correction to happen, or that new coins that have just entered the market or just been bought. So that initially was what caught our eye yesterday and caused us to pull back a little bit from trading, or at least considering any new trades until this had stabilized. Now, has today stabilized? Right, we have to obviously wait to see what sort of volumes we get on the London session. If those volumes are decent and we start to see some good price action, that might be a good first indication that we are moving in the correct direction. Just a quick shout out, I can see also Heine's in the house, Skumbuzo in the house, Gilbert, Felicizwe, Peter, as well as Frank. Good morning, you beautiful human beings. Now, just quickly before we wrap up, and obviously we're going to send trades as and when these trades become available, as we see things work out. Now, again, we are still remaining cautious. We're not full steaming ahead, out of 10 trades that we analyze to see and that have a validity. We're kind of taking those 10 trades and picking one of them, right? So really we're really kind of limping forward with in caution, but we will obviously still send trades onto the free area as well as Premium Plus. Remember, for those of you who want to be part of the mentorship call this Saturday, it's the first mentorship call of 2024, and it's really going to set the tone for the year. I'm going to be teaching a bit of new strategy, be showing you guys some of the best performing accounts from last year. You'll be hearing from some of our best performing students of last year, and really giving you tips and tricks on how to grow your accounts in 2024, what mistakes not to make, and allow you questions and answer session to ask some of the burning questions that you have on your mind, and get them answered in real time, right? This isn't, you ask a question, we'll come back to you in a week. You ask a question about what you're particularly struggling with, whether it be price action, whether it be entries, whether it be risk management, whether it be psychology or revenge trading, and we'll answer it right there in that session. So that mentorship session is happening this Saturday. You need a TDM live account, verified and funded, with the link down below in order to qualify to be in that session, as well as Premium Plus. So I'll explain on Friday how you enter or how you submit your info to be a part of that. That's going to be very powerful, and I'm very excited to see the fruits of the outcomes for those of you who are part of that session. Now, part of the mentorship session means accountability, right? So if you want to be mentored, right, please understand that means accountability. I don't take people under my wing to monitor without being accountable, right? And for you to be accountable for that information. So if you want to be mentored, it's not easy. You're going to have to tell me why you've made certain mistakes. If I see your account move backwards, I need to know why. I need to know what you're going to do to fix it. I need you to be asking for advice, right, as I'll be providing it. So it's not just a straightforward, we get to chat. I don't have time for that. You don't have time for that. If you want to grow and you want to take trading seriously, that is what is going to be needed. And it's going to be difficult, right? It's not going to be easy. So please don't take it as it's just a gift or it's a luxury. If you want to take things seriously and you want to be spoken to in a way that will push you towards a better trading portfolio, and that's maybe what you need. But anyway, just enough about that. We'll speak about that a little bit more closer as we get to tomorrow, and I will advise how you become a part of that, how you submit your info to be a part of that. So we're going to look at markets pretty intensely. Again, a word of caution, we are still taking a little bit of a slower approach. Again, if we had seen the volumes we saw, we would have only started the markets, or we would have only started trading next week. But again, my promise was to start on the 3rd. We will continue to push on regardless of what the markets present. We will make opportunities and find them where they lay. All right. Outside that, guys, we appreciate you. As always, you know the deal. Be safe, trade safe. And until I see you guys a little bit later, goodbye.